And good morning, everyone.
Good morning.
Good morning.
Hello, hello, hello. Good morning, good morning. Can everybody hear me?
Yes, good morning.
Morning.
Hey, good morning. Good morning, good morning. How's everybody doing today?
I'm tired.
After cool. All righty. So we're about to go ahead and get right into it. Let's see. Okay. Right. Happy Tuesday. We're about to go ahead and get right into the market. So we had a bit of some downside momentum immediately after the market closed yesterday. So it looks like we're trying to head back downside, but we have some turbulence. I'm going to go ahead and share my screen here so you guys can see. Um, no. Right. We have a level at 60-60. I'm going to share my screen here in a second once it gets up here, but it looks like we're bouncing up off of that level at the moment. Um, let's see if they can let me get in. Yeah. All right. Can you guys see my screen?
Yes.
All right. You guys see Trade Ovate?
Yeah.
Okay, cool. All right. So here's what we're looking at. All right. All right. You guys can hear me, right? Cool, cool.
Yes.
All right. So here's where we're at currently. We're right at 660 Obviously we came a bit below that, kind of touching what's that 60.58 kind of. So we see that this red line is currently creating a level for us. Our 9 EMA shows us 60.64, which is pretty much where we're looking to get to, or no, sorry, 60.66. Okay, that's where our 9 EMA is currently showing us. We have what looks like a double top that formed here at 60.90. So 60.90, 60.95. So this would be our clear area of resistance. Here we have our area of support. So we see we climbed up a bit from where we closed. Once the market opened back up at 6 o'clock, we climbed right back up, recovered most of the downside that occurred once the market closed. So let me see here. I'm going to go to the 5-minute chart. So the market closed somewhere around here yesterday, and then we started coming downside. Okay. So with this going downside, we created a H. And so we're going even further down now. But like I said, our upside level up here.
You watch.
Yeah, go ahead. Go ahead, Marcel. Okay, I guess he'll come back. All right. So we have a line here pretty much at around 60.75. Okay. Um, we kind of have one here as well. Let me get it again. All right, so we have that line as well. So we were trading in the zone. We came out of the zone and came out of the zone into what looks like is support at 60.58. Okay, 60.58. So we left the zone. Okay, so pretty much here, what we would want to see is we would want to see ourselves stay out of the zone. So the zone right now is pretty much what's right underneath 60.66 into 60.58. Okay, we're here below the zone, right? This is below the zone. This is the zone that we were just in that we broke out of. Okay, so that's how we want to see this. If we were to come back inside the zone, we could go sideways inside the zone. Okay, if we don't go inside the zone, we're probably going to likely continue to go down to the downside because we weren't able to recover or kind of get back into where most of the price action was. Okay. We could even see when we kind of zoom out of it. All right. When we zoom out a bit, we can actually catch this data as well. So we kind of confirm we can see a lot of volume in these areas. Right outside of what was happening up here, most of the data has really been within this zone for the past 2 days. Okay, or for the past 2 trading days. All right, so does anybody have any questions?
What EMAs do you have on there right now?
This is 950. I always have 9 and 50.
You don't use the 21 at all?
No, I don't use a 21, not
Okay.
the way I trade now. But the 21 is essentially the median between the 9 and the 50, in my opinion. So yeah. The purple line here you see, that's the 50. The orange line is the 9. Okay. And this is the 15-minute chart. So again, if we climb into 60, 65, then we would be back into we would be coming right back into the zone. Okay. We'd be coming into the zone and then start potentially going sideways again. If we don't reclaim 60, 65, and we stay below that area, we're more than likely going to create what looks like would be a drop-based drop. Okay. Drop, we have the basing, which is a retest. Anytime we have a base and a retest, anytime we have a basing in a formation like this, it's usually seen as a retest. Okay. So if you have drop base drop, rally base rally, whatever the base is, that middle candle within that movement, that's to be seen as the retest. So whenever you have a rally base rally or a drop base drop, is really pretty much a imbalance in the market where you have your upside level or downside level being broken, and then there's a retest to pretty much validate if the trend is actually changing. And then you have the follow through of the confirmation on the third candle. Okay, so that's how the drop base drop typically is. um does anybody have any other questions?
Yeah, I have one. I've heard a few like different traders talk about like gaps to the downside or upside, and then like price action having to fill that gap later on. So can you explain that?
Yeah, so basically when you have a gap up or a gap down, it's essentially a lot of trading volume happening in a very short amount of time, and specifically without the regular retail traders in the market at that point. So usually your gap downs or your gap ups happen like pre-market or after hours, right? And that's typically where you have more of your hedge funds and things like that trading. So when there's a gap fill, what happens is um, the buyers or sellers, whoever is in control at that point in time, what they tend to want to do is to essentially bring the price back. So this is what I would say is a gap fill here, even this candle right here, right? What happens is because it was such a drastic drop, the retail traders that come into the market, and also some institutional traders as well, will come into the market and bring the price back to like where it's balanced. And then if they do want to kind of take it to the direction that the gap fill, so like for instance for this gap fill here, right? If the sellers still want to take it down, they're going to have to deal with the retest of what the gap fill looks like, where buyers step back in and basically test that level, right? So if they test the level, like which is what it's here, and then they see, well, no, we still can claim this area, then that's how they'll be able to kind of take it back down. So that's the understanding that I have of the gap fill. It's pretty typical. Like you see a gap, pretty much when you see a large gap, you can almost bank that there's a gap fill that's going to occur in the near future at some point in time. So it's one of the more predictable plays in the market.
Thanks.
You're welcome.
I got a
Any,
question, Washington. Good morning, Washington. Marcel.
good morning, bro.
But I see that with the news today, man. I see that we got Powell speaking, and they saying that Trump is speaking as well too at 10.
Mhm.
Should we, or would you advise that we just wait, don't make no trades right now, just after they finish speaking to see how it's going to move, or what?
Yeah, because they're gonna take it either direction. Anytime
Right.
you have news, I want you guys to make sure you understand this. Anytime you have news, it doesn't matter what formation you see, it doesn't matter what setup, it doesn't matter what price level. Like you could literally just throw your entire analysis in the garbage. There's nothing that's going to give you a clear indication on what way they're trying to move the market. You could essentially see it. You could anytime you, especially Trump, anytime you hear any of prominent figures like that hop on the podium and start talking, you might as well just look at your chart and just erase everything you have on it, honestly. Because whatever it is they're going to do for their agenda. And it's not going to matter what the chart's showing you. It's not going to matter what formation, what setup, how much volume, none of that. Like they're going to take it whatever direction they want to take it to. So what I've seen sometimes is they'll take it strong to one direction, then strong another direction, and then go back the first direction. Like I've seen that. I've seen like 20 to 40 points move in both directions within 5 minutes. You know,
Mm.
so it's very, very volatile when they hop up there. Um, so I would just be cautious. Like you would just have to know what's happening. Like because at the end of the day, right? Here's what I would say about tips with news. At the end of the day, there's still an opportunity to make money. It's just you have to be sober enough and aware enough to say, okay, I'm doing this simply because there's news, not because you have a setup, not because you have any rhyme or reason as to what it is you're doing. So if you do decide to go about it that way, then you have the understanding of, the risks that play, right? The risks that are involved. And then you also have the idea of the reward. Now, if you reap a bountiful reward, congratulations. You definitely don't want to take that mindset and apply it as a strategy, right? But if you end up making actual money from that scenario, congratulations, right? The thing is that um, if it doesn't happen that way, then most new traders end up getting frustrated, worried, concerned, like, man, am I really even a trader anymore? When all you really did is just threw money at the market, hoping that it went one way and it just didn't, right? So what I would have to answer your question, I think as new traders, it's really just going to be about spectating, getting an understanding and getting a feel of what's actually happening in real time so that you could prepare yourself in a future scenario or situation, right? Now for anybody that actually wants to be a part of the action, just going into it with both eyes open, knowing what's uh, could potentially happen and how fast it could happen. Like at the end of the day, we have to be people that can be decision makers and quick decision makers. If you see yourself making a decision, know why you're doing it, right? And if you decide to do it, you have to then stand on your decision on why you did it and not blame the market or not even blame anything but your own, decision making, right? At that point in time, right? Um, so I don't know what direction the market's going to be going, based on Powell or even Trump. I have no idea. Sometimes you might hear them say good news about the market and then the market plummets. You might hear bad news about the market and then it goes up. Um, that's pretty much what I've seen. But I have seen that when the market does tend to trend one direction, it typically stays that way throughout the rest of the day. So it's really going to be about getting in the market, taking your profits as quickly as possible, and then also taking your losses as quickly as possible too. Don't get yourself in a scenario where throw contracts at the market, hoping it goes one direction, it doesn't go there, and then you lose your PA account or your evaluation account or your actual money, right? You don't want to get yourself in those scenarios. So, um, just tread lightly, look both ways before you cross the street, pretty much. That's pretty much how I would say. So I hope that helps.
Yes, sir.
Yeah.
Also, do you know like where we can like view the speaking of these speakers or when they speaking with the news? Do you know?
Sometimes you can actually go on YouTube and find the actual meetings. And I think even on the federal website, they might have the link or might even have the video stream on the website as well. I
Okay.
know Yeah, like early option snipers days, we used to actually watch it together. Like once somebody would like just screen share and like just listen to them talk, and then back then we thought there was a rhyme or reason to it though. So we thought, okay, if they say something good, let's go buy, you know. But over time we started to see like, wait, it's not always that way. You know what I'm saying? So there was less of a desire to want to watch it in real time and more so just watch the market react to what they're saying. So, but again, anybody that does want to watch what they're actually saying and listen into it, um, I'm sure they have videos, like I said, on the government website, as well as if you just search, if you just go to YouTube and just search the title of the red folder event, I'm sure we'll see some answers to it.
It's federalreserve.gov.
Yeah, there you go.
Appreciate it.
Hello, hello, hello.
Hey everyone, happy trading.
Happy trading, guys. We got about 5 minutes before the market opens. Right now, we're still below 60, 65. Still outside of that range. As you can see, we're actually kind of on the support side of the range right now. Um, so I guess we'll just see what happens here. If we go downside, we're going to go downside very, very fast. If we go upside, it's probably going to, teeter a little bit before we start really going up. If we do go up, um, we'd have to get over 60, 75. Okay, if we do go up, we got to go above 60, 75 if we really want to get to new highs, especially up here. Okay, but we're gonna have to break through that. If we don't break through 60, 75, we're probably either gonna range or dump back down to the downside past 60, 60. Like I said, anytime we're analyzing the market, we're really looking at the different possibilities so that as we are watching things happen in real time, we can remember what story we told ourselves so that we could have more confidence in what should potentially occur, after, things start happening in real time, right? So if we're under 60, 65, that's that's pure shorts, right? Like under 60 65 is shorts. If we get above 60 65, all bets are off, right? We're probably looking into getting calls or buys at 665, right? But if we're below that, we're potentially more so downside. Now, what I foresee potentially happening is we pop inside the zone, get inside 60 65, get some buyer volume to come in, chop a couple of the sellers, right? They might even take it to 60 70 potentially, and then have some sort of interaction with the 50, right? Because when last were we trading above the 50? When last did we open and close above the 50? Oh wow. Not since yesterday. So pretty much all of after hours trading and pre-market trading, after hours from yesterday, pre-market from today, we have been below the 50 EMA, which means we're trending low. Okay. So in order for us to really believe in the upside, we're going to have to get above this 50 EMA. Right now we're at 50 EMA is at 60 70. Okay. So I see ourselves popping up to 60 70, rejecting somehow at some 5 minute candle, and then going back to the downside. Okay. That's if we even do get upside momentum. We have about a minute and a half left.
You said we was below the. You said we was at 60-50 or below the 50 EMA a couple of days ago. Which one was it you said? Was it
We've been below the 50 EMA since yesterday.
below the 50?
This is the 50 EMA, this purple line right here. The last time we traded above it, as far as an open and closed candle, is over here, right? And if we look down here, It shows us when that was, and that was pretty much around close. So pretty much most of the day yesterday, we were above the 50. After close, we came down from the 50. Okay. So if we want to go upside, if we want to go buy side, we're gonna have to get above the 50, which is at
Mhm.
60, 70. Okay. But until we get above 60, 70, we're not gonna get upside as far as the upside trend. Okay. Because right now the trend is below the 50. Okay.
Mhm.
So the market's opening here in a couple seconds. Right now we're again at that level I talked about, 60, 65. That's the level that they're playing with right now to see where we're gonna end up at. Um, once we open here. All right, 60, 65 now. So let's see. I mean, this is a pretty easy trading plan. All right, we're here. Market open. We're gonna have to see if we get above 60, 70. That's where I mentioned us potentially peaking at. So far the analysis is correct, right? We talked about opening the market and going straight up. Now, where we want to tag is 60, 70. We want to tag 60, 70, and then we want to start spectating. Okay, 60, 70 is where we wait and look for if we get even further past 60, 70, 60, 71, 60, 72. Okay. Are we going to create new highs? That's the question. And here's where it's going to start getting tricky, especially with the sellers currently looking to try to take it down. This is a nice healthy candle here. All right, they're going for 60, 70. If we create a lower high over here, guys, if we come up here and then the next candle goes down, that's literally a lower high, okay, which would mean downside, okay? Lower high means we're going low. Let's see. 60, 70 is coming up. Here it goes. Now, if you got into the buy side from open, that's some precision sniping right there, because that's at least 6, 7 points you just got just from the pop-up from open. We haven't hit 60, 70 yet. Looks like we're going to try to here. We got 2.5 minutes before the next 5-minute candle. Let's see what we get. Here's the buyers now. Let's see, 60, 70 right there. Boom. All right, 60, 70. Now we need to see ourselves hang in this area, open in the next candle, see if we can open above the 50 EMA. That's very important here. We're going to start seeing a little bit of turbulence right here in this area. You guys can hear me?
Yeah, we can hear you.
Yes, sir.
Cool. 60, 70. All right, let's see how long it's going to take us to get even further above 60.70. Let's see if we can get 60.72. All right. Boom, right there. That is healthy. Now, do we create new highs? We have our next 5-minute candle opening here in about 30 seconds. We're going to need to stay above 60.70 to continue the upside. Let's see if we are able to do that. 20 seconds. Are we going to create new highs? That's the question. If we create new highs, that's a new trend. If we don't create new highs, we're going right back down. Okay? If we do not create new highs, we're literally going right back down. Do we create new highs? Let's see. Next candle. Here we go. We're going low. Now, does this candle ever get us above 60.74? That's the question. This is really good risk to reward right here. To take a sell, have your stop loss at 60.74. You could ride all of this all the way down. And if we do go up, you've only risked 2 points. Okay? I would take a sell right here at 60.72. Setting my stop around 60.74, losing about 2 points because we could get some downside. Let's see. Okay, no, we're looking to push up. Let's see what happens here. Boom. Stop loss triggered. All right, so now we're creating new highs. Now we can believe more in the trend, but we have some resistance here, 60.76. Are we going to get above that? Now we're in the zone. Now we're in the zone. Buy side is looking healthy right now, though. It's looking very, very healthy. Still in the zone, though. 60.76. That's where we have to get above to really start trending to the upside even further. All right, we're getting some downside pressure here. Downside pressure. Now, why did we get downside? We got downside because we were attempting to create a new high, and we hit the level that we talked about, right? 60.76. We already had this level here prior to this candle even appearing. Now we're getting the downside we were just talking about. Classic fake out. Let's see if it holds though. Now, if we end up getting back up to 60.75, I would take a sell right there. Stop loss around 60.77. I would make the market show me that it's gonna want to reverse to the upside. Let's see what we get here. What time does what time is the news? Is it 10 Eastern?
Yes.
10 Eastern? Okay. Let's go to the 1 minute chart. So we're holding the 9 EMA on the 1 minute chart. See here. Still holding the 9, but we haven't yet created a new high. Let's see how long we hold up. Did we get the time for the news? Does anybody know what time the news is?
Said 10.
10? Okay. 20 minutes. This looks like a failed new high, but it's still holding the 9. Still holding the 9 EMA on the 1 minute chart. You guys can still see my screen?
Yes.
All right, cool.
Okay.
So 60.75 is right here. That looks like what could be the high on this. If we get back up here, it would be a good idea to take a sell, put in the stop loss, maybe 2 points up, 60.77. Okay. We just want to see if the market is going to really break the trend and go to the upside or not. Because if it doesn't, there's a lot of room to the downside. Let's see what we get here. Still holding that 9. Still holding that 9.
Are you in a long or a short, Watson?
I'm still just watching. It's still holding the 9, so until it breaks the 9, I'm pretty much just spectating right now. We could get a bounce up off the 9 since it's still supporting it. You guys see the 9 EMA here? We haven't opened below the 9 EMA just yet. So I'm just spectating. And we have news coming up in about 15 minutes or so. So volume is looking a little stagnant right now, but we're still watching.
Are there any market conditions that you like absolutely want trade in?
No volume. That's the only market I can't trade in, or I wouldn't trade in rather. Just having low volume, because you're not able to do anything with that. You're not able to profit, you're really only able to lose when there's low volume. Specifically with options though. But yeah, low volume, no, I wouldn't trade with low volume. All right, let's see if we can get to 60.75 here. This looks like an H. Now, for it to finish the H, we're gonna have to get above 60.75. So this is either gonna be a double top or H. Double top meaning one top, two top, come down, or one top, and then we start to trend up to the upside. Where we go here, create the leg, and then start to go to the upside here. So those are the two options right now. Let's see what the market chooses. I think we're gonna go inverse H. Just the way we're holding that 90 MA. I think we're gonna go upside here. Still spectating here. All right, this is looking to me like a double top. We just opened below and are now trading below the 9 EMA.
So question, double tops don't have to be like the exact high or the exact low for it to be a double top or bottom.
No, what a double top usually would need though is a high, at least one, right?
Right.
We're not
But
looking
it doesn't have to meet that previous high exactly for it to be a double top.
Morning.
correct.
Okay.
Like we're not meeting highs up here. We're literally saying one high happened and
Ah,
then
go.
there was a move where there was supposed to be another
Yes,
high
what?
at,
Eh?
and it didn't come up, right? So pretty much we have one high here, which was the new all-time, well, not all-time, but we had a new high here for the day high, I guess. Okay. And then we look to where we were potentially trying to break that high and didn't.
Hmm.
That would be a double top. So you don't have to have them at the same price level.
Okay.
It's the same. It's think of it more as like a wave. Like it's more of a movement. Like you have the wave touching shore here, and then the next wave doesn't really have to come all the way to where the first one did, but the momentum was still there. Does that make sense?
Okay. Yeah.
Right? Because like the first wave might hit you by your knees, the second one might not. It might just get you by your shin, but
Right.
it's still made its attempt to get to shore. So that's what's happening here. You get one top, but you are gonna have to have at least a day high in that to see to have that double top or double bottom, right? Double bottom would then be having a day low, right? Because it's still telling the same story, whether it hit the same level or not.
Okay.
Yeah,
And do you use the MACD at all?
I used it early on. The MACD is not as helpful when scalping. I'd say it's probably better for like swinging more so
Mm,
scalping because it's a lagging indicator. So you're not really getting like the most real-time data. Price action is probably the best indicator that you have outside of your your charting elements like the 9 EMA and stuff like that.
okay.
Yeah. So price action indicators is definitely good. Yeah. MACD doesn't put into account price levels and things like that, so you're not going to get as much or the best information from MACD that you can get as somebody that's scalping, making 5 to 10 minute trades here and there.
Makes sense.
Yeah. We got 9 minutes before the news comes on. Now we're looking like an inverse H. We got the rebound right there at the 60-70 level, almost 60-71. Okay. Now this is looking like an inverse H. Now we're gonna have to get some sort of opening above this area, 60-67. Sorry, 60-74. We're gonna have to get above that. But this is looking like an inverse H now. Let's look at the 5 minute chart. We got to get above 60-74. We just have to. This is a reminder that we're still ranging, by the way. We're still within the range. We haven't broke out of the range yet, 60-76. Okay. So when we come out a little bit, you got to still remember that we're still ranging. Make sure you do that periodically, especially when you're not in a trade and you want to just get a broader glimpse as far as what you're looking at in the market. Make sure you zoom out just like how I just did to kind of keep you level-headed and seeing the bigger picture. The reason why we're still here is because we haven't yet broken above 60-76. But once we do break 60-76, it's going up and it's gonna go up very, very fast. Okay. The first price levels I would say would be this one right here, 60-75. This would be 60-80. Okay. 60-75, 60-80. Those are your next price levels after 60-76. But we're gonna have to break 60-76 though. We just touched it and came down a bit here. Almost. But yes, this looks like a setup for a H inverse H to the upside. As you can see, guys, the volume is still very low. My assumption is that we are waiting for 10 o'clock. Now, at 10 o'clock, there's no such thing as a pattern. There's no such thing as a price level, none of that. Whatever they're going to take it is where they're going to take it to. That's another failed new high right there. This could be seen as a triple top here. If we're not able to reclaim 60 74. That's what I like about a lot of these formations and setups is that now we have defined areas of stop losses. When you see a setup and you have a defined area for a stop loss pertaining to what you want to get into. So for instance, this trade right here, because I'm calling it out as a double top and then triple top, I would literally get into this trade up here somewhere and then stop loss is where we never been. Okay. So that would be 60, 75.5, 60, 70.75.75. That would be my stop loss. Now I know how many points I'm willing to give up. And so if I then get into the downside, look at what I'm being given. Plus the extra real estate we have towards the downside here. That's how you want to see your plays. You have the setup. The setup gives you the defined stop loss. It's easy. You can see it. We stop our loss. Why? Because if we go up, we know it's inverse H. So that's why I want to stop out. Okay. That's why I would want to stop out if we're going to the upside. So you don't have to guess, oh, when do I get out? When do I get out? I'm losing so much. When do I get out? First of all, you're not going to lose a lot because you're having your stop tight, right? And then you know where you're stopping out at because you're just looking at the chart and saying, well, we've only touched this level twice within the last hour. So if we're near that level, I can then take a very calculated risk to say, okay, we probably are going to go down from there. Take your position in and then start taking to the downside. But if we go upside, then you get out immediately because you get out at the first sign of upside momentum going the other way, right? So, if it's sunny outside, grab grab your sandals, right? But then if it starts raining, then you're like, all right, I'm out of here. I'm going back inside, right? And that's your stop loss. Your stop loss is when it starts raining. You don't need you don't need it to start pouring raining to know that rain is coming from the sky to go back inside or to go get your umbrella. Okay. So you don't need for us to go deep into the upside to know that it's no longer going downside. No, we don't need that. All we need to know is the smallest sign of we're not going upside anymore. That's all you need, and that allows you to protect your portfolio. Okay. Um. So again, we're still ranging in this area. Um. Now we're pretty much around this. Move this out the way. It likes this level for some reason, so we're gonna put that there, and then we're also gonna put this here. Oh, messed up there. Let's see that there. Put that there. Great. So now we have a new range within a range. Let's go back out and look. We got 2 minutes left. Now we have a range within a range. Let's see what we get. About a minute left now. You got a minute left. If you're using TradeOvate, you should be able to see your timer or your clock rather. On the top left side, you can see it down to the seconds. Anybody have any questions for me before the news breaks here? Any questions? Okay, cool. I guess we're all just waiting. So quick notes before we do hit 10 o'clock. We're up above the 50 on the 1 minute chart, the 5 minute chart, and the 15-minute chart. We're trading above the 50. Okay. Now, does that play a pivotal part into what's about to happen here? We don't know. We're about to see. I guess not. Are you guys watching this? Can you guys hear me?
Yes, we heard you and we
Yeah.
saw it.
Right. All right. Now you guys see this candle? I told you guys typically up, down, up, down. Right now, it came down first. Now it's going up. Does it go back down? That's the question. And this is the tricky part right here. Imagine that. Look at that candle. Look at that 1 minute candle. Look at how indecisive that candle is. It's like somebody that you ask them like, do you know what you want to eat? And they never know what they want to eat. It's really frustrating. But we got a candle to the upside now. Let's see if we keep going up. Mm. 5 minute chart pretty much says inverse H. 15 minutes says rally base rally. We're hanging right at that 676, 60, 75, 76 again. Crazy. Right back in the zone. Imagine that. Y'all see the zone here? You
Yep.
see the resistance? We came right back into it. Let's see if we can climb above it now. Still above all EMAs at the moment. So let's see. This is still sideways to me, guys. We went up, we came down. We went up, we came down. We're back up again, but we're still in this range. And we came down 5 points from 60, 80. Let's check the 1 minute chart. Coming down. Now, are we going to hold this 9 EMA? We got 10 seconds left on this 1 minute candle. They might retrace this whole thing, y'all. back in the zone. Look at that. Look at that. Oh my God. That is crazy. Now we're down 10 points from that high. That's a rug pull. All right, I think we're about to break this zone here. Oh my. Do y'all see this?
Yep.
So remember, before the news came, we prefaced this. We talked about how we can go up, right? And then before you know it, we can literally go right back down in 5 minutes, not knowing that that was actually what was about to happen, which is kind of crazy. Okay. We literally went up 60, 80, and now we're down to 60, 70. And these are 1 minute candles. This is literally within 5 minutes. We went up 10 points and down 10 points and within 5 minutes. So this is pretty much further illustrating the idea of trading with news. We don't know we don't know what they're gonna say. We don't know how they're gonna react, right? They're probably saying whatever it is they've already said. That news probably ended up spiking the market, but then once the market is spiked, then the sellers are like, wait, I want to take profit. And then now we see this avalanche to the downside. Um, you can't make this up. You really can't. But I'm glad we talked about this before the market. Well, before we got that news at 10, just so you guys could see it, right? Because it's one thing to hear me say it, and it's like, okay, whatever. But now we're literally seeing what we just talked about. I think that's very fascinating. So we've left the zone twice. We went up, right? We got out the zone. Now we're coming down, and we got out this mini zone. Let's look at the higher time frames here. So we're still in the larger zone, but we definitely left the mini zone that we were in for quite a while. And now we're trying to get back into it. Let's see. This could be a 90 EMA touch. Let's see if we get more downside here. Mm, let's see. Mm, wow. Drop base drop to the downside. That was a nice play. 90 MA. Ooh, 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 ooh. 90 MA reject, guys. That's what that looked like. And we're getting that downside now. If they touch the 9 EMA again, guys, that would just be about taking more sales. Let's see if we get back to this level. Let's see if they allow it. They bought this whole candle up, though. That's pretty impressive. Right, they bought that up. Oh no, they're going back in the zone. That was quick. I was looking to position right at the 9 EMA for more sells, but they're looking to get back in the zone. Let's see the next candle here. We got about 20 seconds left until this next candle. Are they going to stay in the zone or are they going to reject it and come back out? Let's check. Let's see. 10 seconds. Still in the zone. I think we'll stay here. Oh no. Let's see. Now we crossed above the 9 EMA on the 1 minute and the 50. So we're back above the 9 EMA. This means that the buyers have control. Okay, as well as we're above the 50. Oh, not anymore. Back down. Now, I think it's gonna hold. I think we're gonna hold here just because we came back into the zone. I think buyers are gonna want to hold this level, 60, 70. I don't think we're gonna go back down. So let's check this next candle here. We got 10 seconds left. I think we'll hold. They did a lot of work to get back in here. They went from 60, 60, 60, 60, 66 all the way up to 60, 73. Okay, so that's about 7, 8 points. Yeah, I think they're gonna want to stay here for a while. Do you guys have any questions for me? I know we're past 10 a bit here. Any questions before we depart here, guys?
Should I trade today? Because it's not looking too great right now.
You said what?
I said, should I make a trade today? Because it's not looking too good right now.
Yeah, I mean it's news, guys. It's just the nature of news, you know. I've traded in the airport during news. Oh my God.
Mm.
I don't even want to talk about. Okay, that's actually the most painful story about news for me.
Oh my gosh.
I was
Now I
trading
need to know.
I was trading options. So, man, trading in the airport, man. Oh my God. At least if you're waiting for your flight, that's not a bad idea. But I think I was in a TSA line, just being a rebel, just being a. This was several years ago. I was in a TSA line, and it was a news day, and I was like, I'm gonna ride this news wherever it's going. And I was very, very, I was just very ambitious, you know. And so
Mhm.
I quickly got into the trade. I was in profit. I didn't take the profit because I was like, it's news, it's news, it's news. I didn't take profit, but I thought about pretty much imagine it was basically the same day like this. Imagine I had profit up here, right?
Mhm.
Thinking we're going to continue going to the upside. I think there's maybe like a gap fill or something crazy. I don't know. And so I'm like, all right, this next candle is going to even take this even further. And so I'm just in profit, just so happy in this TSA line. The next thing you know, dun dun dun. These candles came out of nowhere. Oh my gosh. And I was living an out of body experience. So I couldn't even press the sell for myself. And I didn't have a stop loss set. So I'm watching myself in third person, or I'm watching myself have an out of body experience like press sell, hurry up, press sell. Like you're losing your profit before you know it. I think my profit probably finished down here, and then I started going into the negative down here.
Mm.
I end up maybe selling like pretty much around here, right? It was the same day. It was pretty much the same day as this. It went up and then it came right back down, and it just didn't recover, right? So
Mhm. How
I
much you lose?
okay. Today's Tuesday. I don't want to make this tearful Tuesdays, okay? I'm not trying to cry. I really don't want to cry, I promise you. But let's just say it was pretty much a couple five figures
Wow.
that I lost on that in the TSA line. I was actually on my way home. Uh,
Wow.
it wasn't good.
I
It
know that flight was real quiet.
it was not good. It was not good. I tried to just sleep the flight away, honestly, and just hurry up and get home. But um, the thing about it though is even on days you take a loss, and the reason why I can even still talk about, even though it's painful, I can still talk about it just because of um the fact that I have the skill set that enabled me to actually bounce back from that, you know. And I
Right.
think that's what you guys need to always keep in mind is that even on days where it may not look like the best day ever from a trading perspective, understand that your opportunity is tomorrow. So even if you do have a day where you lose out, the better fact to walk away with is not the money lost, but the fact that you now have a learned experience that will allow you not to make that mistake again. Okay. So for what it's worth, I could if I maybe made a few $1,000s and kept that behavior of trading news at the airport in a TSA line, like if I taught my body to continue to do that, there's been much more money I would have lost because think about it. Every single time I'm in a TSA line at that point, I'm probably just thinking about how much money I want to make, right?
Right.
And I would have taught myself something that's not a good trading behavior. So even although I lost that amount of money, I could have lost even much more money had I allowed that to become something that I created as a strategy, right? So the actual realized amount is never going to be as much as the unrealized amount, and that's what you guys always have to realize. Even as a result of being a trader in general, like there's so much unrealized money that we've lost out on as a result of not being a trader all of our lives. Think about it, right? Most of you guys have learned how to create $1,000 of money that's not even your own, right? Going and getting a prop firm account and learning the skill set of how to actually earn at least $1,000. Like, think about how valuable that could have been 10, 15, 20 years ago for some of you guys. How valuable that skill set would have been, right? Like, so even think about it this way. As the result of being a trader, you actually are able to now realize the unrealized losses you didn't even know you were losing. Like 20 years ago, you lost out on being able to learn how to make $1,000 in the markets. That's how you kind of have to envision it now. So even if you do take a loss now, it's better that you're now a trader because you could actually correct that loss as a trader, right? You can't correct the loss you didn't know you didn't have, right? So that's a deeper level of thinking. But if you guys are to capture what I just said and really apply it to your trading journey, it's going to allow you to digest the journey a lot better, right? You are a better person today because you know how to trade, period. It doesn't matter how much money you make or lose as a result of that. The fact of the matter is that you now have something in your tool belt that is going to continue to allow you to be even more profitable as you continue to learn more about the skill set, right? As long as you don't quit, you're going to continue to be gainful and profitable with trading. As long as you don't quit, because at some point in time, you're going to last through the learning curve to get through and get to the earning curve. That's where you want to be regarding your trading journey. All right. So I've been there. I've lost enough money for all of us that's listening to me. Okay. And and I don't know what that was.
Me neither.
Okay, that was my Google Home. Um, so I've done that already, right? So and so what I've learned as a result of that is my superpower is being able to be a trader and to understand the markets and to be able to say, okay, at any given point in time, I can multiply this money to change my situation, right? That's that's really how you have to look at your trading journey. So um a bad day here, a bad day there, quote unquote, as far as the market is concerned, taking it, because honestly, even if you do take a trade and it doesn't go your way, that's still a learning lesson to make money the next day, right? There are days that I've lost money in the markets, and then the following day made it back times 10, times 5, times 3. I've had days like that. So my body already knows how to digest a loss because I'm already forward thinking after the loss. I'm I'm digesting the loss for what it was. I'm learning the loss for what it's going to teach me, and then I apply that to the next day. Now, do I always gain the next day? No, but I know it's possible to, which is what means more to me than actually doing it, is the possibility. Like every single day, we have a possibility of changing our tomorrow, right? We have the opportunity, we have the chance to change our tomorrow. So, because I already did it, now I have the understanding that it could always be done, right? So, everybody listening to me, you've already been someone that already has earned an amount of money in the markets. Now, all you have to do is stay in the feeling of that so that that feeling stays real to you even in moments where it doesn't feel like it's not true, right? um so I hope that helps you guys, especially considering I had to lose a lot of money to learn what I just told you guys. But just stay focused, stay grounded, stay rooted. Don't let the great days get you too high, and don't let the low days get you too low. Try to stay as even keel as possible, um, watching the market for what it is and respecting it, taking your stops, and then trusting your gut when you're also maximizing your gains as well. All right. So again, right now we're between pretty much 60-70 and 60-75. We're back in the zone. We talked about this, right? We talked about the idea of um, you know, having your levels within the market and keeping them there so that we can have an idea as far as what's happening. Once we pop back into this zone, the first thing I said was, "Oh, we're gonna stay here for a while." I don't know if you guys remember me saying that, but as soon as we
Yeah.
popped in, we're gonna stay in here for a while. It's not gonna look like we're gonna get back and dump to the downside, at least not initially. So there's a lot of trading going on within this zone right here. So I would say wait until we get a breakout before hopping on either side. All right, guys. Any other last questions?
Yes, one last one for me. So I started my eval last week and I didn't have the best start because I had made a couple rookie mistakes. But starting this new week, I have taken one loss yesterday and I called it a day. So, and I'm not sure about trading for the day today since because of market conditions so far. But just any advice as far as like specifically when you're in the eval and how to go about that? Like you make sure to not to overtrade or like how many trades should I be taking in a day or things like that.
Yeah, great question. And I'll actually allow some other individuals in the chat. If you guys also have some advice, definitely put it in the chat or go ahead and chime in here. But one of the main things you want to do is what I was just talking about, which is staying even kill. Um, the eval accounts are evaluating your ability to be consistent, not your ability to make tons of money. Okay. So when you're consistent, that's when they're going to be able to give you that account. And so if you create a system around your trading and allow your profits to be more consistent, more so than just, large in sum, it's going to give you the ability to pass the eval account. Okay. Definitely don't overtrade, because if you have a good day, let's say you have a day goal and you make that amount of money, right? The worst thing you're going to want to teach your body is that you didn't do a good job, right? Because what happens is, let's say you go into the market, you make 500, 500 was your goal. You say, you know what? Today I'm superwoman. I want to go for 1,000. And then you go back into the market and then your 500 profit disappears, right? It not only disappears, it goes from zero down to negative 500. And now you're looking at yourself like, wow, am I a trader anymore? Of course you're a trader. You just made potentially the wrong decision with going back into the market, right? You want to stack your confidence on a day-to-day basis. Leave the market every single day saying, I'm I am a great trader. I am a confident trader, and I'm mindful that the moves that I make impact more than just me. And by the time you hone into that, it's gonna give you the ability to say, you know what? What's the purpose of actually going back and getting more contracts? So what's the point of getting back into a different trade if I've already hit my day goal? Let me hold on to my confidence, bring it back the next day so that she can make more money. Because I promise you, it's the confidence that creates the cash flow. Everybody here, whoever's heard me say that, I'm sure by the time you actually got the cash flow, you realize, wow, it took confidence for me to get it. Okay, the confidence is what's going to create the cash flow. That's how it becomes consistent. All right, not the home runs. Okay, so that's the advice I'll give you. Does anybody else have anything else they wanted to add? I know a lot of us here listening have eval accounts. Gerard, uh, I know Derek does. Davina, Marcel, um, Marty. I believe Marty. Marty, are you running the evaluation account yet on Apex or Take Profit Trader? Um, Gerard is here as well. Davina. If you guys have any advice you guys want to pass off to India, definitely share it in the chat as well as on Discord as well. Because yeah, that would be helpful.
What was our question again?
Pretty much any advice on uh how to be successful with her eval account.
Okay. Yeah, basically like Watson said, just basically just being disciplined. That's what I would add. Being disciplined, and for me, and I would say being consistent as well too. Showing up, looking at the market, setting your trades up, and make sure that you're setting a stop loss. Those are the most important things.
Good
Okay,
stuff.
thank you.
Gerard says, "Don't be greedy. Take profit and get out." Thanks, Gerard. Appreciate it, bro. Good stuff. Good stuff. All right, guys. Looks like that inverse H is loading up here. We are actually able to break that we broke that level 6076. Um yep, we broke the level 6076 here. So let's see if we get the upside. Gerard said he ran the hard way. Look at this 15-minute candle. This is a news candle. Okay. And it was a doji. I want you to think about what you're looking at right here. This is a 10-point candle and it's a doji, meaning it literally went both directions within no 12. This is 12 points. A 12-point doji candle. I don't think I've ever seen that before. A 12-point doji candle. This is literally the story of the news. Like if you just take a screenshot of this candle to remind you of what news is, that's literally the perfect candle to do that. A 12-point doji candle in 15 minutes. That's really interesting to me. So yeah, we created the inverse H. It's running now. And what I was telling you guys before is what once we break it, it's gonna go there and it's gonna go there fast. we already passed. We sped through 60-80. I think next we're gonna see 60-85. So that play was very simple. Pretty much just play the breakout, right? Once we get above 60-76, take buys, and then play the upside. That was the play just now. If we were to break either this, well, maybe not 60-70, but if we were to break 60-63, we would have did the same thing and took sell orders. All right. All right, guys. If there's no other questions,
Wait,
oh,
sorry. This is my last one. It's not a long one. It's just, do you like, if I were to send you a trade for you to give me feedback, would you do that? Or, I mean, you don't have to. I'm just wondering if you like, if I made a trade and I wanted, you to critique it or grade it or whatever to see how I did, even if I lost or won or whatever. Would you do that? I've done that with Josh before, but I didn't do it with every trade. It's just like some certain trades. So I was just wondering if I could get a second opinion as well.
yeah, definitely. Just hit me up, maybe put it on Discord or something, and then I could show it to you. Or if you want to get on the Zoom call or something, just hit me up, and then we could do that.
Okay. Thank you.
All right, you're welcome. All right, guys. I will chat with you guys soon. And like I said, see you guys on Friday. Josh is going to be leading you guys on Friday. I hope you guys learned quite a bit. The recording is going to be in the YouTube content section. So, yeah.
Thanks, Wazzy.
Yeah, welcome.
Thank you, Washington.
Yeah. All right, guys. Chat soon.
Bye.
Peace.
Peace.